Um, Keeping losses small. Okay, yeah. So this was another question we had. Like, how do you really keep losses small? It mainly depends on where your stop loss placement is, right? And so it also depends if you really understand higher highs and higher lows in candles. So let's say if you have a resistance up over here, right? And you have candles that is moving down. So what we say over here is that in uptrends, candles will create higher highs and higher lows on 30-minute to 1 hour time frames. In the downtrends, candles will create lower lows and lower highs on 30-minute to 1 hour time frames, right? This far, things make sense. If price is trending down, you want candles to make lower highs and lower lows. If price is trending up, you want candles to make higher highs and higher lows, right? Because that's what a trend is. Understanding change in trend is important. Oh, it should be change, not chance. I'm going to review this with Rakil here. Yeah, so understanding the change in trend is important. What this means is that you have to understand what the lower time frame is saying. Because let's say if this is a 30-minute time frame here, right? We have a 30-minute time frame here, and you have candles that are moving bearish. You have a candle that is moving bearish here, and you took so basically once this candle closed bearish, you're like, okay, perfect. What I'm going to do is I'm going to take an entry right over here, and I'm going to put my stop loss up over here, and I'm going to take a sell. So you, Mr. Trader, you take a sell over here, and now price starts to move down. You're like, okay, perfect. Price is moving down. This is awesome. But for some reason, what happens is that once you switch to the 15-minute time frame, you see that a 15-minute candle now starts to move up, right? Now 15-minute candle is starting to move up. You have your stop loss up over here. And when the 15-minute candle starts to move up and when it closes against your direction, this is where you have to make a decision, right? You have to make a decision. What percentage risk are you going to take off? Are you going to take off 50%? Are you going to take off 25%, 75? That's totally up to you, right? You have to identify what risk you're taking off at this point. Me personally, I'm taking off 50% risk because once this 15-minute candle closes against me, what I'm expecting is I'm expecting the next 15-minute candle. Now there's a higher chance. Now trading is all about probabilities. You guys have to understand. It's all about probabilities. When the 15-minute candle closes like this, there's a higher probability for the next 15-minute candle to maybe go up like this, right? And if the next 15-minute candle is going to go past my entry, and if it's going to go in drawdown, if it's going to take me in drawdown, I want it to take my 50% position in the drawdown, not the whole position, because once it's in drawdown, there's a high chance we might break above this resistance as well and hit my stop loss. So let's say if you have a one lot running, right? And if the candle closes, the first 15-minute candle closes bearish, you might want to close off maybe 0.5 lot, because if this is a 10 pip spread, if this is a 10 pip stop loss right over here, if this is a 10 pip stop loss, and if a one lot hits your stop loss, you're losing $100, but if price comes back to your entry point and you close 50%, now you've reduced your risk by 50%. Because sometimes what does happen is that when price comes to your break even, and let's say some guys say, oh yeah, like, I had my stop loss at break even and price came to my, like where my entry was, and I closed position, and then price went my way, man, like, fuck, like I should have let it open, like it always happens to me, like this market is so difficult, you're blaming everybody, but the thing is, now you have to manage your risk. When price is coming back to your entry, and if you still believe that price will continue to go your way, but you're still uncertain about it, it's always better to close some percentage position. I'm always closing 50%. Whenever price comes back to my entry, now instead of closing out at break even, I'm closing out 50%. because in the past it has happened, price comes to my entry, I close everything, and then price goes to where I wanted it to go, and I'm like, oh man, should have just held it, or should have just kept it, whatever. But we don't know that, because like everything is based on probability. So when you're closing 50%, now you're taking off 50% risk, and now you are stress free. Because the main cause of stress in trading is when we go in a drawdown, right? And when we go in a drawdown, now we're expecting a loss. Some people don't know their risk. Some people are over leveraged. You don't know how much you're going to lose when you hit your stop loss. So the rule of thumb here is, I would say everyone needs to adopt this methodology to keep your losses small. Because if you close 50% over here and price hits your stop loss, now you've lose $50 instead of losing $100. So now you've kept your stop loss small. So now when you take a winning trade, and that winning trade, you end up with 10 pips, now you're in profits, because now if it hits your take profit on a one lot, you have made $100 minus the 50 you lost over here. Now you're up $50, but if you don't close 50%, or if you don't close a percentage position and it hits your stop loss, and if the next trade wins, then you're at break even. You're not going anywhere. This is the main problem people have. The main problem I see, the questions I see or I get are basically, hey man, so I keep taking trades, my risk is managed, but overall I'm at break even. I win a trade, I lose a trade, I'm at break even, I win another trade, I win another trade, and then lose two trades, I'm still at break even, I'm not moving. The reason why you're not moving is because you're not managing your risk. I don't know why people don't teach this. I don't know why no one talks about this. I mean, this is really important, man. Like, you need to understand how much you're taking off the position, how much risk you're taking away, because it makes no sense to take the whole stop loss, right? So in the same way, like, if prices moving up, so you're looking at the smaller time frames. Okay, what's this? What if the trade goes back your way? Do you add the 50% back? Depends. I still have some material to write on it. So we're going to discuss how to add positions to winning trades in more detail on May 17th. I'm going to keep it for that because there's still some things I have to backtest. So this is how you're really reducing your risk. The main thing is, the only thing you can control in trading, remember this, the only thing you control in trading is your risk. That's it. You don't control the outcome. You don't know if price is going to go your way. You don't know if it's going to go against you. The only thing you're controlling is how much you have risk on the table. So for me, personally, whenever I see, let's just summarize all this here, right? If you are expecting the 1 hour candles to continue, now this will be a very objective scenario. If you're expecting price to continue bearish, right? If you have 1 hour candles going bearish, or I use the 30 minutes, so we're going to go up to 30 minutes. If you're seeing the 30-minute candles going bearish and they're making lower highs and lower lows, and for some reason, if there's a 15-minute candle that's closing bullish, then there's a higher chance that price may start to go against you. So this is where you need to see that, okay, well, I see a smaller time frame candle that's going against me. I may want to take some risk off the table because I don't want my entire stop loss to hit. I want a portion of my stop loss to hit. It's very important. What if you enter a trade and it goes completely the opposite way from the start? Do you close 50% or let it breathe? That's totally up to you. What it means is that if you enter a trade and price just starts to go against you all of a sudden, then it's what they say, it is what it is. Like, you can't control that, right? So that's why you have a stop. Like those are things that will happen, and you'll have to get comfortable with that. Like, you can't really control that. But the one thing I will say to that is, like, let's say you have a candle that's going bullish from support. These are very generic examples. And now you take a buy. So let's say this is a 30-minute. So all the candles I draw here, they will be 30-minute candles, because 30-minute candles, they have a higher probability of moving. Let's say if you have a 30-minute candle and it's moving bullish, right? And you take a buy over here, and the next candle starts to go bearish. right? So next 30-minute candle starts to go bearish really, really quick. Now, there's a very high chance that before this candle comes down to hit your stop loss on the smaller time frame, you will see a candle close. Because you have to understand this. Someone asked a question about fake outs. Again, I explained, don't ask any questions until the end of the presentation. Everything is covered. I think I should just mute the comment section here, because I don't know, people don't listen. I mean, you have to let it flow. I mean, I took this time to make a presentation, so let it flow. Perfect. So when you're looking at the 30-minute candles, you have to understand that, okay, there are two 15-minute candles in one 30-minute candle. So there's a very high chance that before this 30-minute candle closes, you will have one 15-minute candle that will close bearish. So if you have one 15-minute candle closing bearish, or let me just draw them here on the side. So let's say you had, for better understanding, let's do this here. So you had a 15-minute candle that went up, and then you had the next 15-minute candle that went up. So these two 15-minute candles, they formed one 30-minute candle right over here, right? And now if you have the next 15-minute candle that's forming bearish, right? Now there are two things can happen. Maybe this bearish 15-minute candle is forming a lower wick on the 30-minute candle to push up. Okay, maybe it's forming a lower wick for a 30-minute candle to push up. Now this takes a lot of experience. So when I see, so now you have to look at the size. How big is the size? So if I'm seeing that the 15-minute candle over here is breaking the low of the previous 15-minute candle, at this point I'm closing out 50%. Because if it's breaking the low, what's a downtrend? A downtrend is when candles are making lower highs and lower lows, right? So if this candle is breaking the low, that means there's a higher chance for the next 15-minute candle to continue down as well. So at that point, I'm taking out 50% of the position, because now I'm being safe. I don't want price to hit my complete stop loss. I want to keep my money with me. I don't want to lose 10% on my normal, like I use 10 lots right now. I don't want to lose 10 pips on a 10 lot. I want to lose maybe 10 pips on a 5 lot. I want to cut that in half. You have to really make these rules. And this is where Magic Keys come in handy, where you can just close out a percentage ASAP. Because as you're moving your mouse towards your monitor or your terminal, you're thinking, right? You're thinking, oh, and while you're moving your mouse, you're watching the candle form. Now you're giving the room for more thoughts to come in. As you're thinking, you're like, okay, maybe I want to move your stop. Okay, the first thing is, don't move your stop losses. If you're moving your stop losses, you're fucking up right over there. Don't move stops. If you're placing the stops, you have to respect the stop losses. If you're moving your stop losses, I can guarantee you will never ever go anywhere in trading if you're moving your stops. So never move your stops. If you really want to move your stop losses, instead of moving stops, close 50%. Because now you're letting go of 50% stress, anxiety, whatever the case may be, right? So I hope keeping losses small, it made sense here. Of course, we're going to simulate this later on too, but it's really important. You have to make rules like how much are you going to close when you see candles closing bullish or bearish, or when you see candles closing against you. I always do that. And it has helped me keep my losses small. You guys have seen this. I've done it in the live streams, posted my results about it. Because now what's going to happen is if you're keeping your losses small like this, if you're closing out certain percentages, now you're giving room for more gains. Because I know a lot of people in this webinar, we have like 104 people, you're all profitable. You all have really, really good analysis. You have to adopt this change and you're going to see a big change. So when you see a change like this, when you're keeping losses small, man, you're going to have less stress. You're going to have less anxiety. You're not going to be worried about things as well. Really important point mentioned, if you're thinking of a stop loss, close half. Yes, exactly. That's awesome. Just close half. Just close half. If you think your stop is going to get hit, but if you really think price is going to go your way, just close half position, and it's just great. It's like taking off a 50 kg backpack. while you go on hiking, you have these big ass backpacks, you're running up the hill. And once you take it off, you're like, oh my God, it's so good now. We're good. So that's what it is. You're taking off some baggage. So let's go to the next slide here and let's see what Rakil